This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. We are seeing some volatility around the world. Really, it's focused on Europe. That story about Volkswagen, I think, is getting a lot of traction. You know, basically, I think there's 1 in 7 workers in Europe are employed by the automotive industry, so that's why you have the DAX down almost 3%. With that said, if you look at the chart of the HEDJ, which is basically a proxy for Germany, you know, obviously the trend has been broken well before this. You know, the first quarter you had a really strong trend when you were above the 8, the 21-day, and even the 50-day, and then it broke basically right around here, and it's been somewhat of a headwind since. And when it broke below the 200-day right there, that's when, you know, a lot of macro weakness set in. So the question is, you know, you get volatility when you make lower lows. And if you look here at the HEDJ, you will see that right now this has been trying to hold this 5560 area, which is probably opening below. If it were to stay and close below, then you have a retest of the August lows, and the retest of that area comes in near 5245. So there is a void from this big support spot all the way down to the August low, so be careful. The 21-day has been resistance basically since it broke down, showing you negative trend, risk off. As far as our market's concerned, you know, we've been navigating this lower wedge, and we've had a very bearish tone ever since that Thursday topping tail RDR. You know, we mentioned how we went into resistance, sold down, giving the ball back to the bears when the Fed didn't raise rates, because that's what the market wanted. So we've been in a defensive stance ever since, and I actually come in net short today, which is nice with the way the futures are. You know, so you look at the S&P, you will see this channel was resolved lower. Okay, resolved lower ever since we've been broken below this 2040, below every moving average, especially the 200-day. So from here, remember that little wedge pattern? Well, we had a nice little break above it into the Fed meeting that was sold. That gave you a topping tail into this 1997 area, and we stalled right at 2020. So we've been mentioning how the market can get pressured and go back to the lows if this trend line or the bottom end of the wedge gets broken to the downside. So with that being said, we're down about 25 handles, so your first level of support is right here. So we'll see if we pause here or can't reclaim that. If you can't reclaim that, your next congestion area comes in a little bit closer to 1920, and then this is the August lows of 1867. So if you do trade the spiders like me, you know, I've already covered a portion of them into this gap fill, which comes in below 194.30, and I think we were as low as 193.80. So, you know, here's your line this in. If the spiders can reclaim that, which is basically this trend line here, then your next spot comes in a little bit closer to this 190.150 with a few different points of reference along the way. But overall, this topping tail, which we discussed and I've tweeted about many times with the chart, has been in control, which gave you your sell signal after, you know, a cute little push up into the Fed. So with that being said, you know, there's been a lot of talk about the retest of the low, so hopefully you're positioned for that, or at least just out of the way. You know, yesterday you had a shot across the bow with the bios. You know, Hillary, like I know her, Mrs. Clinton came out and I think threw a bit of a curveball at the company, saying that they jack up prescriptions way too much and that they're going to do something to maybe stop that, which means profit margins go down, and since the valuations are high, blah, blah, blah. gave some pressure. You know, my note yesterday, I talked about the IBBs and the ascending channel and said if it were to break 351, okay, it could be a lot of trouble. And here was your 351, and that's where the moving averages were. And just so you see, when ascending channels or ascending wedges get broken to the downside, you have voids there. Look at the void here. Okay, so that basically hopefully got you out and maybe got you short, because this also is the first indice or sector to break below Friday's low well before the market. So with that being said, you know, you have a few levels here. Okay, you have this, which is a 331, and then you have 324, and then you have yesterday's low to see whether or not it reclaims it or not. So yesterday's low is 337. So, you know, I would watch the bios today. You know, I think there might be a chance that, you know, I think the IBBs are down 5. You know, if you see a 30-minute low, maybe nibble a little bit versus that for some kind of, you know, what's it called, red to green trade just for cash flow. You know, if you're short from yesterday's week close, you're getting some downside follow through, and I would cover some, you know, and keep taking those trades. At least there's downside follow through, especially for that sector that was the weakest yesterday. So, you know, those are your momentum rules. As far as other sectors, look at the Qs. You know, this also had your, you know, your topping tail into resistance coming in right here. This has been holding up better. Here is some pretty big support. I believe that's 103.60. You know, at this point, you're probably a little bit below it. Actually, no, that's not 103.60. I'm sorry. That's yesterday's low. Yesterday's low is 104.73. Here's that 103.60. That was what I was thinking about, which also kind of coordinates to your spiders 104.25, which is that gap from last week. You know, the gap fill happens right here. So the question is, does it hold this area or close below it? You know, you have that ascending channel right here too, where, you know, you're now on the right side of this channel versus the left side. Okay, so, you know, we'll see how tech acts today, because tech has been a brighter spot in the market. So you want to see, does anything lead us off those lows? And with that also said, then you got to look at the key stocks. Apple was very strong yesterday on the fact that they might have an electric car, their iPhone refresh, et cetera, et cetera. You know, here is Apple. It's been acting, you know, pretty, you know, better since the lows here, leading the market a bit. You have your trend line right here. I would think, you know, this could be something to go from red to green. If it can't, you're not going to get any kind of move off the lows, I don't think. So here you have this inside wedge. If it were to break below 111.87 in today or so, then you just got to get out of the way, because who knows what's next. If it hangs out in here, at least, you know, it could provide some leadership. Apple's been doing that for us, actually. Apple broke this channel to the downside well before some of the areas of the market, giving you some clues. You know, we were all complaining about this channel in Apple, but it really was telling you that the market was also not going to go anywhere. So anyway, here's your move from the August 24th lows. It's right in here. We'll see whether or not it could provide some leadership today. I am long some Apple, but I'm much more overweighted short the spiders. So, you know, hopefully Apple can go green and we could trade around it and figure out what's next. You know, if you did get caught long some things because yesterday's decent close, it happens. It's what's called a bull trap. You know, so what you want to do today is you want to get the first 15, 30-minute low, and then perhaps buy versus that. And if you get a bounce, okay, to fill the gap, you know, sell some, hold some. If it can't fill the gap and gives you that H sell setup, then you have to decide whether or not you want to get out and salvage your trade and just book the loss and move on or not. You know, some of the other stronger stocks, you know, you had Amazon. Amazon has been a rock star. You know, it's a little extended, but it gave you a really nice move ever since it broke above this 532. So today, I think it's down $7 or $8. See if it can go green. You know, if it can go green, it's, you know, continuing its rock star status. I would be a little careful. I'd wait till at least perhaps here, the 8-day. You know, the 8-day moving average for Amazon, I do believe, is a little bit closer to this 532. So if you're looking to buy a dip, I wouldn't do such a shallow one. I would wait till perhaps this 532 to be safe. Google's been trying to be strong, you know, not as strong as Amazon. I would think that this area holds if it wants to keep the momentum, and that's around you know, 654. 654 going sideways. If that continues to hold, I would think that this is, you know, continuing its go-to status. But if that doesn't, again, you have this rising channel here where if the market wants to get that weak, you know, it could break to the downside. So watch this to see if momentum stays. You know, we know Tesla's been a very strong stock. A lot of guys made good money the last 2 days trading it, and then yesterday it got hit on the news that Apple might have an electric car. So every time someone says they're going to have an electric car, they come and hit Tesla, but then they come back and buy the dip. So at least there's two-way action there. So now for Tesla, I guess, for this to keep some momentum, which it got very loose and wide yesterday, which never is a really good sign, I would think it needs to hold this 253 area. So see if this holds to go sideways to digest the move. Everyone got a nice little trade when it broke above this, but now there's a little volatility. You have a doji here, meaning the market doesn't know what to take from it. So if that's the case, you always it's always a good sign to reduce some. So hopefully you did that yesterday. So now I would say this 250 to 253 is a pretty key support area to see if momentum stays. As far as like Netflix, we had a decent trade last week. I'm not long or shorted because I was just playing, a day and a half tactical move from that red dog reversal right here. And then I was actually talking to my friend Keen, who got short yesterday, and if you got short with him, good job. Now we'll see if it comes right back to this 94 area or tries to hold higher. So yesterday's low on Netflix, which you should watch, is 99.56. Does it go below it and stay below it, or does it reclaim it to then continue to work to then perhaps at some point take out this descending channel? But for right now, it's still trapped. Take your trades. Some of you that made some good money in FIT as it had a big move off the lows, and if you sold strength yesterday, you know what, maybe there's a trade there today. I'm going to look at FIT today too. FIT had an ugly candle yesterday, which you never stay long for. This is when basically it broke this small descending channel and then cleared this. Okay, so remember my day count rule, 1, 2, 3. You sell on day 3, so you don't have to stick around for something like that. So anyway, big ugly candle, so we'll see, does it hold higher? I would say somewhere around this 36, perhaps see if, you could buy this dip, because I'm sure it's down with the futures, and, maybe you get a red to green move there. As far as the banks have been weak ever since the Fed, didn't act, because the banks need higher rates, and that's the reason why they were up ahead of it, so they deserve to be sold. So now the question is, how weak do they get? So if you look here, just look at Goldman Sachs as a proxy. This was actually upgraded yesterday and couldn't really do much. So I would watch this. If Goldman Sachs breaks and closes below this 180, chances are, the bears are going to be, roaring a little bit. So see what happens here with this trend line here in Goldman Sachs. Another bear type flag after a big move lower, and this is still below the 200-day, which means you do not own it for more than just a trade yet. JP Morgan, you could probably look at to see what's going on there. Same type of thing, below the 200-day. An outside day on Fed day, meaning weakness. So now the question is, does it get below this and stay below? If this gets below 60 and stays below 60, a big void down to that little flash crash August 24th. I don't think that this might happen, but I'm just saying there's a big void there. So see what happens here. See if it gets reclaimed or not. If it doesn't get reclaimed, then there's weakness here. It's going to help fuel the move lower. As far as gold, not still thrilled with this. I know that it had its first decent move. You had your first gap up here that held. Okay, when gap ups happen, they could fuel some type of new type of trade, and when it doesn't get filled, which is what you saw here, that ignited this move. So if this is going to be any good, the GLDs need to hold 107.50. As far as oil is down today. See what happens here too. You still have this inside range. You had your igniting bar here, okay, which gave you 3 big up days, and it's been trying to hold this level since. So I would say 14.25 is the magic number. The USO's got to hold in for oil. I believe that's around 42. If this doesn't hold, you can get a move back to lows. If this holds and stays in there, chances are the downside could be a little muted. So we'll see what happens in here. And I guess to give you a quick look at the XLE, that 62.50 area is important. If this level doesn't hold, I would be careful. That 62.50 going across still hasn't been able to break above descending channels and break the downtrend that this thing's been caught in. And just so again, sometimes you look back and you can get good data from it. Here was that head and shoulders top in the XLE when everyone thought it was the best sector in the world, and that was your first signal to get out of the way. And that's when it broke below the 21-day. And this 200-day actually got broken well before this. So we talk about as a trader, you get out of your swing longs when it gets below the 21-day. As an investor, you get out when it breaks the 200-day, and it's been below the 200-day for quite some time, which is definitely not a bullish sign. So short term now, watch 62.50. And with that said, we'll see what happens today. Futures are down 22 to 25. I don't know if they're going to be down 50 or if they're going to be down 10. What we're going to do is we're going to look at some sectors and stocks for clues. If you came in short, okay, the spiders or some of your stocks, you cover half, like I do pre-market, and then you see if the weakness persists. Maybe you can even put it back on. If you're trapped in some longs and you want to buy this move lower, maybe you get a better average cost. But if all of a sudden you buy versus a 30-minute low and it doesn't bounce, you got to figure out whether or not you want to sit in it, for what could be a very volatile scenario, or just salvage it and revisit it at lower levels. And if you are a macro investor, you know what, stay the course. If you have a 529, a 401k, a 403b, and you lived through the financial crisis or the tech bubble burst, et cetera, you're going to live through this time period as well, as long as you have a long-term time frame. But if you trade for alpha and P&L, you better be watching us closely. You better keep those feet quick. You better know your levels, and you better have a plan. I will not be here for tomorrow. It's Yom Kippur. If you're fasting, may it be an easy one, and I will see you maybe at the recap, but definitely on Thursday. Have a good one.